Okay, so the travel industry is absolutely booming right now, and a company called Hello G Holidays wants to jump on that train with its new SME IPO. The big question is, could this be your ticket to a fantastic investment? Well, let's get into it and find out.
And really, this is what it all boils down to, right? You've got a travel company going public right when everyone wants to travel. On paper, it sounds like a match made in heaven. But is it really that simple? We're going to dig into the numbers, the business model, and the risks to see what's really going on here.
All right, first things first, let's cover the basics, the essential details of this IPO. We're talking dates, price, and, what it's actually going to take to get a piece of the action.
So here's the quick rundown for you. The IPO opens up from December 2nd to the 4th. The price is set between 110 and 118 rupees a share. But I want you to pay close attention to those last two details. The lot size is huge, and it's listing on the SME platform. Now that tells us this isn't your standard run-of-the-mill IPO, and that has some major implications that we're about to get into.
And that massive lot size? Well, it leads us directly to this pretty hefty number. If you want in, you have to buy a minimum of 2,400 shares. So at the top end of that price range, you're looking at an investment of over 2,83,000 rupees. This isn't a small play. It's a clear signal that this IPO is really targeting high net worth folks, not your average retail investor.
Okay, so we know the price of admission is steep. The next logical question is the company even worth it? So what's the story behind Hello G Holidays? Who are they?
Well, they're not brand new to the scene. They've been around since 2012, starting out in Chandigarh. But look at the timeline. The really big moves have all happened very recently. They went public limited in 2024, and then, just this year, moved their main office to Delhi. A move like that to a major hub like Delhi, that screams ambition. They're clearly gearing up for some serious national growth.
So what is it they actually sell? Well, think of them less like a travel agent and more like a full-service travel manager. They do the whole shebang. It's not just about booking a flight or a hotel. Nope. They're crafting entire holiday packages, arranging car rentals, and even handling all that annoying paperwork like travel insurance and visa help. And their game plan for finding customers is pretty smart. They're playing both sides. On one hand, you've got the B2C side, where they deal directly with you and me, tourists and families. But then they also have a B2B arm, handling corporate travel and even working with other smaller travel agencies. Having these two different income streams gives them a nice cushion and makes them a bit more stable.
All right, so now that we've got a feel for the business, let's look at the fun part, the bull case. What are the big strengths and the financial numbers that might make you think, this looks pretty attractive?
The first number you gotta know is their revenue. In the last financial year, they pulled in just over 28 crore rupees. That's a solid number that shows us the scale of their operation right now and gives us a benchmark for how they grow from here.
But, revenue is just vanity. Profit is sanity. And the good news is, Hello G Holidays is profitable. They cleared 2.1 crore rupees in net profit. That's proof that their business model isn't just about making sales, it's actually making money.
Now, this might be the most impressive number of all. Their debt-to-equity ratio is just 0.01. For all practical purposes, this company is debt-free. In an industry like travel, which can get hit really hard by a bad economy, having a squeaky clean balance sheet like this, it's a massive, massive advantage. It's a huge sign of stability.
So, to sum up so far, the picture looks pretty good, right? You've got a profitable, nearly debt-free company operating in a sector that's on fire. But, and there's always a but, every investment has a flip side. We have to talk about the challenges, especially the ones that come with it being an SME IPO. Okay, time to look at the other side of the coin. Let's get into the bear case. What are the key risks here that you absolutely need to be aware of before you even think about investing?
So there are four big ones to keep on your radar. First up is what's called SME liquidity risk. Basically, these smaller stocks don't trade as often, so if you want to sell your shares, it might be tough to find a buyer right away. Second, remember that the travel industry is cyclical. It does great when the economy is strong, but it's one of the first things people cut back on in a recession. Third, we've already talked about it, that super high investment cost. And finally, there's the valuation. The company has to grow into its price tag, and that puts a lot of pressure on them to deliver.
So, we've laid out the strengths, we have examined the risks. After all of that, what's the final takeaway from the analysis? What's the bottom line? And here it is, plain and simple. The consensus is that this is a classic medium risk, medium reward play. What does that mean? Well, it's not a guaranteed winner, but it's not some crazy wild gamble either. It lands right in that middle ground.
So let's translate medium risk, medium reward into practical terms. Who is this actually for? The analysis suggests it's for investors who get the specific risks of SME stocks and are willing to play the long game. We're talking a 2 to 3 year horizon, at least. And who is it not for? Definitely not for anyone looking to make a quick buck on listing day. This is not that kind of IPO.
So in the end, it really all comes down to this question right here. We've laid out the case for and the case against. We've given you the facts and the analysis. Now the ball's in your court. You have to ask yourself, does a medium risk, medium reward opportunity like this actually fit into your own personal investment strategy? The decision, as always, is yours.